All right, today we're going to unpack one of the wildest, most explosive, and frankly, kind of bizarre stock moves we've seen all year. We are talking about Datavault AI, ticker DVLT. So let's dive right in because the story behind this chart, well, it tells you everything you need to know about a powerful new way to move markets, one built on stories, hype, and some pretty high-stakes legal warfare.
So get this, on Friday, January 2nd, 2026, if you blinked, you probably missed it. The stock didn't just climb, it went vertical, booking an insane gain of almost 55% in just one trading session. No, this was not a gentle rise. This was an all-out explosion.
And the fuel for that rocket launch? An absolutely astronomical volume of over 324 million shares. Now, to put that in perspective for you, the entire public float of the company, every share available to trade, turned over multiple times in a single day. This isn't just a little bit of retail interest, folks. This is a full-blown market event.
So that brings us to the big question, right? What on earth could cause such a violent, high-volume move in a tiny little micro-cap stock? Well, the answer is this chaotic collision of forces that honestly tells us a whole lot about the kind of market we're all trading in today.
Okay, let's break down the action from that day. The stock opens at 79 cents and it immediately dips to 76 cents. That's a classic move designed to shake out the weak hands and trap any early short sellers. But then, wow, the rip higher was just relentless, hitting a peak of $1.12. But what's really interesting here is the close. Finishing at $1.11 is absolutely critical. It holds the stock above that key $1 compliance level, which is a huge psychological win for the bull.
So to really understand the why behind this move, you have to look at the two completely different stories that are now battling for control of this stock's future. You've got to ask, is this just another scammy pump and dump, or is there something much, much deeper going on here?
You know, the conventional wisdom here is pretty simple. Most serious investors, they see a penny stock with a history of losing money, they see it throwing around buzzwords like AI, and they just scream pump and dump. They see a liquidity trap and they run the other way. But the reality, it's way more complex. The company has made a very sharp pivot. They're shifting from trying to develop tech to something called litigation arbitrage. They're basically turning their patents from ideas on paper into actual weapons. And suddenly, the market is pricing in the chance of massive legal settlements. This makes it an asymmetric bet. Yeah, the downside is it could go to zero, but the upside could be enormous.
And the proof of this pivot? It's right there in who they hired, Kazowitz LLP, a law firm that is notoriously aggressive. This was not a subtle hint. It was a loud and clear signal to the market, and especially to big tech, that they are done playing nice. They are ready to fight.
So what exactly is litigation arbitrage? Well, think of it like this. It's a business model where a company's main revenue doesn't come from selling a product. It comes from winning lawsuits. By suing larger companies for infringing on their patents, they're aiming to score these huge settlements or licensing deals. All of a sudden, you're not betting on their tech anymore. You're betting on their lawyers. The entire game has just changed.
But here's the thing, the legal strategy, that was just one piece of the puzzle. The company also rolled out a series of really unconventional tactics, all designed to grab the attention of a new and very different kind of investor.
They pretty much threw everything but the kitchen sink at the market to create what you could call a catalyst cocktail. And every ingredient was picked for a reason. The lawyers, they add legitimacy. The warrants, they reward shareholders for holding on. And the meme coin, well, that was pure rocket fuel for the internet. You combine all of that with this populist story of taking back your data, and the entire cocktail was just engineered to go viral.
And this really is the question at the heart of it all. To an old-school fundamental analyst, giving out meme coins just screams desperation. It looks like a complete circus. But in our modern attention economy, where being ridiculous often means you go viral, is it possible this is actually a brilliant piece of marketing? One that's perfectly tuned to attract money from the crypto and the meme stock worlds? It's a real question.
Okay, now let's pump the brakes for a second and get a dose of reality here. As exciting as this whole story is, the risks are just as huge. So we need to look at the fundamentals, or the lack thereof, and see how traders are actually thinking about navigating all this volatility.
Let's be brutally honest about the bear case for a minute. This company has a history of financial losses, and it burns through a ton of cash. The legal strategy itself is super expensive and could totally drain their bank accounts. Those warrants could water down the stock value in the future, and, this is the big one, this kind of retail-driven momentum is incredibly fragile. If the internet's attention moves on, this stock could collapse just as fast as it went up.
Now, this is definitely not investment advice, but here's a quick look at the technical map that traders are watching.
They're looking for an ideal entry if the stock pulls back to that 120 to 137 support zone. If the bulls can stay in control, they're targeting resistance around $1.60 and then that critical breakout zone at the $2 psychological barrier. But risk management is everything here. A decisive break below $1.20 would be a huge red flag that the momentum has failed.
And that really brings us to the single most important takeaway from all this analysis. This stock is a highly volatile trading vehicle. It is not a stable long-term investment. You are renting this stock for the story and for the momentum. You are not marrying it for its balance sheet.
So we'll end on this thought. The whole Datavault AI enigma, it forces us to ask a much bigger question about the future of investing. In an economy where attention is literally the most valuable commodity and a good story can get an entire army of retail traders on board, you have to ask yourself, does a company's narrative now matter more than its numbers? The answer to that question could very well define the next decade of investing.